Did you hear that? Chalo aja. Let's resume. Okay. Now talking about rotation of an auditor covered by section 139 subsection 2. What do you mean by rotation? Auditor will revolve? No. Can I say rotation basically implies change in auditors? Acha. When the auditor should be changed depend on who the auditor is. Either the auditor may be an individual or a firm. If the auditor is an individual, then you have to rotate after a period of nothing but 5 consecutive years. This 5 consecutive years basically is known as one term. On the other hand, when you people talk about a firm, then there is double. So ultimately there you have to rotate after a period of 2 consecutive terms of 5 years each, which is totaling to 10 years. Although it is 10 years, I told you people that you cannot appoint the firm straight for 10 years. If you people want to appoint the firm, first you can appoint them for 5 years, then you can reappoint them for another period of 5 years, but you can definitely not appoint them for straight away 10 years. Also, ultimately, I hope realize if at all this term is not satisfied, supposing say here the individual only did 3 years, say here the firm only did 7 years. Even if they have done only 3 years, we will assume they have completed their term of 5 years. Even if they have done only 7 years, we will assume they have finished their term of 10 years. And after their term is respectively finished, I hope realize the same individual or the same firm cannot become the auditor in the same company for another period of 5 years. This 5 years we people basically tell as which period? Cooling period. Correct. So there has to be a cooling period of how many years? 5 years. Thereafter, if you people remember, if one firm is disqualified from being appointed as an auditor in that particular company for 5 years, if there is another firm, but there is a common partner, then that other firm is also qualified or disqualified? And the other firm is also disqualified. Why? Because of the common partner. Acha, there can be only one common partner or there can be more than one also? More than one also. So there can be common partner or common partners. Acha. Thereafter talking about the applicability of your rotation. Is rotation applicable to all the companies? No. Rotation is basically applicable to 3 companies. Come on, which? Listed, unlisted and private. Acha. When you talk about listed, is there any condition? No. Can I say if you're listed, it is straight away compulsory? I hope you realize. So they're compulsory. But when you talk about unlisted and private, is it conditional? Yes. How do you remember? Correct. Push clone, 10, 50, 50, 50. What? Push clone, 10, 50, 50, 50. Acha. And all the conditions, if you people check, are correct. Greater than or equal to the amount. And I hope you realize these are OR conditions. It means you have to satisfy both or anyone. Even if you satisfy anyone, then it is compulsory. So it is listed, unlisted, private. Listed compulsory, others unlisted and private. Push clone 10, 50, 50, 50. Okay. Thereafter, we people remuneration, the we people had finished. I think we had done branch audit. Okay. Talking about nothing but branch audit. I think it will be here. See, I hope you realize when I did branch audit, I told you the only condition that is there is the company should have a branch. If the company has a branch, I hope as audit should be done. There is no other condition or criteria like it must be a big branch, it must have a turnover of so and so, nothing like that. If there is any company and if at all they have a branch, then they have to audit the branch also. Now, obviously there will be HO if there is a branch. So both of them will maintain financial statements. So you will do audit here also, you will do audit here also. The auditor appointed here is known as statutory auditor. The auditor appointed here is known as branch auditor. Thereafter, we people saw basically 3 things of branch audit which are different. One, qualification. Second, appointment. Third, duties. When you talk about qualification of the branch auditor, can I say that depends upon where the branch is situated? Correct. Either the branch can be situated in India or it can be situated outside India. If it is situated in India, correct. Then ultimately, can I say the qualifications are two? Which two? First is statutory auditor himself. So can you appoint the statutory auditor also as the branch auditor? Yes. Acha. Is it necessary to appoint statutory auditor? No. Can you appoint someone else also? Yes. That someone else has to be correct, qualified as per section 141. That is either an individual or a firm. When you talk about outside India, can I say first two will remain the same? What is the third one? Any other person who is qualified as per foreign laws. If you people remember, I told you if the branch is there in the US, it is better you appoint a CPA there only rather than sending a chartered accountant from India to nothing but US, because ultimately the audit has to be done according to the laws of that land. Thereafter, when you talk about appointment of the branch auditor, this also was simple. Appointment is firstly to be made by the shareholders in a general meeting. However, if the shareholders do not want to appoint, can they direct the BOD? Yes. So ultimately, I hope the BOD can appoint only if they are delegated by the shareholders. What if I tell you that ultimately the shareholders have not delegated the BOD? Then can the BOD appoint? No. So BOD can appoint only if delegated by the shareholders. Perfect. अच्छा, देर आफ्टर नथिंग बट तेरे को ही देख के, और नहीं तो क्या, रहने दे, तू स्टार्टिंग में तूने ही की थी. Thereafter, talking about the duties are very simple. It is the duty of the branch auditor to submit the branch audit report to the statutory auditor, who will include that report in his main report. And it is the duty of the statutory auditor to write in his report whether he has received such report from the branch auditor or not. But this is when both of them are different. Correct. Can the statutory auditor and the branch auditor be the same also? Yes. Then will this apply? No. All other provisions with respect to disqualifications, rights, duties, penalties, all these provisions for the branch auditor are the same as they are for the statutory auditor. Whatever is different is what we people have already discussed: qualification, appointment, and duties. Thereafter, talking about rights and duties. Rights and duties are also simple. We have just done rights up till now. As far as the rights of an auditor are concerned, I hope realize they are again statutory rights. So nobody can curtail those rights. Nobody can restrict the rights, not even the shareholders. Even if they pass 100% unanimous resolution, still it is not allowed because they are given under law. So whether it is rights or whether it is duties, both of them are given under the Companies Act 2013. Talking about the rights of an auditor, I told you how to remember. Do you remember the key? Come on, what is the key? Correct. Air gives life. So can I say AIR gives life? Acha, come on. A stands for right of access to the books of accounts. I stands for right to obtain information and explanation. R stands for right to report to the members. G stands for right to attend general meetings. I don't know how many of you remember, I told you about general meetings. What do you mean by right? Right means you may or you may not. I give you an example of basically I have a right to vote as a citizen of India. So if I want, I will vote. If I want, I will not vote. Now, similarly, if I want, as an auditor, I will attend general meeting. If I want, I will not attend. Now, most of the auditors, they were not attending. So thereafter, there came section 146. And as per section 146, now it is not only a right of the auditor to attend general meeting, now it is also a duty. It means, can I say he is under definitely an obligation to attend. Okay. And thereafter, last one was right to lien. What do you mean by lien? Hold back. Correct. Hold back what? Books of accounts of the company. Client. Correct. Nahi dunga, will not give, will not give. When will you give back? Correct. Only when you receive the fees. See, why are you holding the books of accounts? Just like a gamer? No. Can I say you're holding books of accounts because you have done work, but you have not received fees for that work done? So ultimately, I hope realize if you have some books of accounts of the company, then you can hold back and you can release them once you people get the payment. Is this okay? So right of lien is conditional or unconditional? Correct. So right of lien is unconditional. Correct or incorrect? Incorrect. Can I say it is correct? Conditional. Why conditional? Correct. Because it is told by me. No, it is told by IC, not AIR, ICAW. Correct. And as per them, how many conditions are there? Four. Very simple conditions here. Firstly, the documents which you are retaining must belong to the client. Second, documents must have come into the possession of the auditor on the authority of the client, not through any illegal means. So you have not done theft, etc. You people have got the books of accounts which the client knows. Acha, next is nothing but those books of accounts are such on which you have done work. And obviously, those books of accounts on which you have done work, you have not received fees for such. All cool? All cool. Come on, right down. Next question. Duties of an auditor. Oh, removal of auditor also we did last time. Oh, you want me to revise it? तेरे को तो सब आता है ना. लास्ट टाइम भाग गए थे तो बीच में से बंद कर दिया था तूने. हाँ पता है मेरे को. हाँ. Okay, I'll revise removal. Wait, removal is also simple, but then important at the end. Some people just want 5 minutes more to relax, you know. That is what they. Imagine me. I have to like yeah in 6:30 so much I have to speak yeah dash, and you are like array revise 5 minutes we can also still relax more. Huh? Rude. So rude yeah. और नहीं तो क्या. चुम्मा. हाँ. Come on. I'll revise. Come. When you people talk about removal of an auditor can be done by three parties. One is BOD, or by the shareholders, or by the NCLT. When you people talk about the BOD, it is covered by section 140 subsection 1, shareholders 140 subsection 4, and NCLT is the total, which is 140 subsection 5. Now, when you talk about any removal here, okay, we are obviously talking about the removal which is before the expiry of his term. It is because once the term is over, he is not going to wait for you. He will only get lost now. So obviously you are talking about removal before the expiry of his term. Firstly, initiated by the BOD, covered by section 140 subsection 1. Here the process is very simple. Firstly, the BOD, they will pass a board resolution. Obviously, they will pass a board resolution in a board meeting, correct? Thereafter, within 30 days from passing the board resolution, the company should make an application to the central government for getting their approval. Acha. Thereafter, you have to make this application by the way in which form? ADT2 along with the requisite fees. Thereafter, once you people get the approval from the central government, then the company, they will have to hold a general meeting within a period of 60 days from getting the approval for passing the special resolution. And if the special resolution, if passed, then auditor is removed. Acha, what if the special resolution is not passed here? Then is the auditor removed? No. Then ultimately I hope Rise will continue. But you already know that before taking any action for removal, the auditor should be given an OOBH. What is that? Opportunity of being heard. Perfect. Thereafter, we have section 140, subsection 4, which is appointment of auditor other than the retiring auditor. In other words, removal of the existing auditor. What do you mean by retiring auditor? Existing auditor. Correct. Now, here ultimately initiated by the shareholders. Correct. So, firstly, the shareholders, they will give a special notice to the company. Can special notice be given by any shareholder? No. Only the shareholder who have minimum 1% of voting rights or minimum paid up share capital of rupees 5 lakhs. Thereafter, the company will give the copy of the special notice to the retiring auditor. Thereafter, the retiring auditor has a right to give a written representation to the company. But this written representation should not be too lengthy. It should be in brief. Thereafter, the written representation, the company shall give a copy of the written representation to the shareholders at least 7 days before the meeting. If it is not given, then the written representation can be read out by the auditor in that particular meeting. But thereafter, if the ordinary resolution is passed, then the auditor is removed. But here you at least require an ordinary resolution. Huh? Be careful. When it was initiated by the BOD, there ultimately I hope a special resolution is required. When it is initiated by the shareholders, only ordinary is required. By the way, I hope in either case, shareholders only can remove. Conclusion. See now, shareholders passing special, shareholders passing ordinary. Initiate anybody, let them do. But I hope conclusion can happen only by the shareholders. All cool? Acha. Who gave a written representation to whom? Correct. Auditor gave a written representation to the company. Say, supposing this written representation is not that proper. Say the auditor has misused the right. Rather than justifying himself, say he has defamed the company. In that scenario, can I say the company, if they are not satisfied with the written representation, the company can make an application to the tribunal. If the tribunal null is also satisfied. On an application made by the company, that auditor has actually misused the right. Then the written representation will neither be sent to the members, nor it will be read out at the meeting. Can I say it will be cancelled? Come on, yeah. Huh. And obviously, you know that if at all the ordinary resolution is passed, only then auditor is removed. If it is not passed, it is not removed. Auditor will continue. All cool? And the last one, which is nothing but section 140 subsection 5, which is NCLT. Now see, when I say removal by NCLT, NCLT can either themselves, so much, okay, either themselves or on an application made to it by the central government, remove the auditor. So supposing if NCLT has some information, okay, that ultimately the auditor and the management, they have colluded together. You understand? Colluded, come together, and they are committing something wrong. So if at all the auditor has colluded along with the management and tried to commit a fraud or is committing a fraud, then the NCLT can pass an order that auditor has to be removed. And thereafter, ultimately, the auditor stands removed. So this can happen suo moto on their own. Secondly, the central government can make an application to the tribunal. Thereafter, if the tribunal is satisfied on an application made to it that yes, ultimately the auditor has actually colluded with the management, then the tribunal will tell to the central government within 15 days from that application date that okay, you people now appoint the new auditor, and thereafter the old auditor who is removed will not be able to continue as an auditor in any company for 5 years. So for 5 years you can say he is basically disqualified. All cool? All cool. So ultimately NCLT either themselves suo moto or by application made to it by the CG. Okay, that was nothing but removal. Now come, now to definitely we have to write what are the duties of an auditor. Now there is no other option. Where did it go? Yeah. Written. Okay. For the duties again, I hope it is under the Companies Act 2013. So can I say again, you'll have to follow them. If you people don't follow them, can I say you're not following law? And if you don't follow law, can I say you will have to pay penalty? Correct. That penalty we have to learn after this only. Okay. But first, the duties. Come to the textbook, please. Point 6.2. Straight away after rights. Yeah, duties will take time. We have to understand in detail. It's not just we are taking an overview. Acha. Now, first let us just take an overview of how many duties are there and what the duties are there. Okay. Firstly, section 143.1, it is on the duty to inquire upon certain matters. This is very important. Comes in the examination for 4 to 5 marks. This is also known as audit inquiry. Put a slash and write down. ऐसा करेगी तो घर में भी मास्क पहनना पड़ेगा. Comes in the examination for 4 to 5. Acha. We'll see in detail. Thereafter, it is duty to report upon certain matters. By the way, difference, huh? This is duty to inquire upon certain matters. Inquire is to check, and this is duty to report upon certain matters. So you have to report that in your report. Thereafter, duty to state reasons for negative remarks in his auditor's report. So if at all he has given any negative remark, he has to give reasons why did he do that. Next is duty to comply with auditing standards. This also is common sense. Next is duty to report upon any other matter prescribed by central government. Underline other matter. Write down there, CARO. CARO. What is CARO? That we'll do later. There is an independent question on that. Thereafter, duty to report fraud to the central government. This also important. Comes in the examination for 5-6 marks. 143.12. Thereafter, it is duty to sign the audit report. I don't know how many of you remember. See, this is section 145. If you people remember when I started with the chapter of company audit, I hope I first I did 141, which was qualifications. Then I did 145, if you remember, signature. That is actually here. So who has to sign? Can I say obviously if individual himself, if it is nothing but a firm, then practicing partner. Do you remember? Okay. But thereafter it is penalties. One duty is missing. Read on section 146. Duty to attend general meetings. Come on, Adania. Okay. Now we have to go one by one. Firstly, come to the first duty. Duty to inquire upon certain matters. Acha. In that also, before you people start reading and then I explain, firstly, one, two words which are important to be marked. Prejudicial. Write down. Harmful or biased. Thereafter, merely. What is merely? Only. Revenue account, P&L account. Yes, that's it. Now come on, let us start one by one. Firstly, I wanted to read clause A. There are basically 6 clauses. We'll go one by one, covered by section 143.1. Come on, read clause A, then I'll explain. Read? Okay, now hear carefully. Clause A is only talking about the loans and advances which are given by the company. See, it is made by the company. It means company is not taking loans and advances. Company is giving loans and advances. When you take loans and advances, for you it is a liability. But when you give loans and advances, for you it is an asset because you are giving loan to somebody. So it is your money. Okay. So if the company has given anybody loans and advances, think and answer. Can I say that should be properly secured? No. In other words, when you are giving loan to somebody, can I say you should take adequate security? Because if you don't take adequate security and that loan becomes bad, can I say eventually the financial interest of the shareholders will suffer, and therefore that becomes prejudicial to the shareholders. Prejudicial, harmful. So the auditor has to check what, that if at all the company has given loans and advances, then whether the security has been properly taken or not. All cool? All cool. Come on, second one, read. This also is simple. Here the clause is telling that if the transactions are represented only by book entries, check whether they are prejudicial or not. Now see, they are just book entries. It means, I hope there is no exchange of money in that. It means it is just a book entry. There are so many entries which are just bookish entry. Simple example, any estimates, any provisions, I hope depreciation. I hope these are all involving no exchange of money, but these are transactions which affects the books of accounts. Okay, take a simple example of provision. For a simple example, if you want to make any provision, what journal entry you will pass? Can I say it will be P&L account debit to provision? So your P&L will get a debit And I hope your liabilities will get a provision balance sheet. Agreed? Now my simple question to you, is it involving money? No. Is it just a book entry? Yes. Is it a transaction but which is entered? Yes. Now if the management wants to say manipulate the book profits, can I say it is very simple for them to manipulate book profits wherever there are such book entries only, where it does not involve money. For simple example, if they want to show book profits very less, so can I say they will estimate provision more than what is required. So ultimately book profits anyways will become less. So I'm not talking for tax purposes. Huh? Tax purpose is separate. I'm just talking about I hyperlize what you just want to show. In reality, it may be something else only. So auditor has to be careful that ultimately, even if there are transactions which are just involving book entries, those transactions also should be to the extent possible reasonable. All cool? All cool. Come on, read C, clause C. Dania. Okay. Now, firstly, I hope realize the company should neither be an investment company or a banking company. Why? Because the company, which are investment company and banking company, their main business is to make investments. So for them, it is basically like stock in trade. Okay. So we are not talking about investment company. We are not talking about banking company. So I hope realize other than that, if you are auditing that company, then you have to consider that company. So if you are auditor of a banking company, will this clause be applicable? No. If you are auditing an investment company, will this clause be applicable? No. So this clause is applicable only to those companies which are neither an investment company nor a banking company. Now, if at all you are that other company, okay, and if you have idle money, think and tell me, should you keep idle? No. Can I say better is to invest? Yes. Now, supposing if I tell you, say you invested, but you can invest in various other things, no, like you can invest in bank, make a deposit. Similarly, you can purchase shares of another company. Similarly, you can purchase, correct, securities of another company like debentures, bonds, etc. So use common sense. Can one company purchase shares and securities of the other company? Yes. If they can purchase, question, can they also sell? Yes. What if the management have sold those securities below the purchase price? In other words, can I say they have sold it at a loss? And if they have sold it at a loss, it is the duty of the auditor to report that to the shareholders, that the investments which the company has made has been sold by the management at a loss. You understood what I told? Repeating. Firstly, the company should neither be a, correct, investment company nor a banking company. It should be other than this. Now, if at all they want to make investments, can they make? Yes. Can they purchase shares, debentures, and other securities like bonds of the other company? Yes. If they do, can I say for them it is investments? Can I say they can also sell the investments? Now, if they sell the investments, can I say they can sell it below the purchase price? In other words, can I say they can sell it at a loss? If they sell it at a loss, it is a duty of the auditor to report to the shareholders that such investments are sold at a loss. See, just because I'm telling that investments were sold at a loss, don't always think that management is wrong, huh? Don't ever have the perception that management is doing everything wrong only. It is not like that. Managements are good also, which actually want to do better for the company. Okay. Supposing if I tell you like this, say my purchase price was 10. I thought that okay, my target will be 15. So when my target is 15, I will sell it when it is achieved. But suddenly 10 became 8, 8 became 7, 7 became 5. Now suddenly management started panicking. Management is like, Arey Baba, before this 5 becomes more down now, before it becomes 1 and 2, let us sell it so that we don't have to, correct, suffer further loss. You understand what I'm telling? So why did the management actually sell below the purchase price? Correct. Can I say to prevent further loss? Can I say what was their objective was actually something which is a sensible objective? So ultimately, just because they have sold below the purchase price, don't always think that what management is doing is wrong. That is wrong type of thinking. All cool? All cool. Come on, clause D. This is so simple. Whether the loans and advances have been shown as deposits. See, this is actually, I hope you realize, classification problem here. I'll tell you how. Supposing if I have money and I go to the bank and I make a deposit, can I say that is my deposit? Can I say that is like my fixed deposit? Can I say that is my money? Can I say it is my asset? Okay. Now, supposing say I give you a loan, can I say again that is my money? Can I say again that is my asset? So can I say loan and advance given is also an asset and deposit also done is also an asset? So can I say both of them are assets? Now, what the company can do is they can manipulate in classification. In the balance sheet, supposing if I have given you the loan, then it should appear like this, na? Loans and advances given. But can I say this is risky as compared to deposits? So you know what the management did? They did not write loans and advances given. They wrote deposits. Obviously, the balance sheet will still tally because still it is an asset only, no? But what will the shareholder think? Shareholder will think like this: Are, company has made deposit. So ultimately, our money is in safe hands. It will be with the bank. No need to worry. Actually, your money is not with the bank. Actually, there is a money which will be with some director given as a loan. So ultimately, that money may never come back also. You never know. It is risky. So think and answer. Ultimately, here the classification done by the management is correct or incorrect? Incorrect. Then obviously the auditor will have to check whether the loans and advances which are made by the company, whether they have been shown as deposits. All cool? All cool. Come on, next one. Whether the personal expenses have been charged to revenue account. Revenue account, P&L account. See, I told you this when I did the first lecture of auditing. If you remember, persuasive information, conclusive information, managing director of the company went for nothing but I hope realized lunch with the family. You remember personal expense, but he charged to the company's P&L showing as nothing but business promotion expenses. So ultimately, I hope that to the extent possible, auditor has to check that no personal expenses should be charged to revenue. But can I say in reality, definitely there will be definitely a certain amount of personal expenses which are charged to revenue. Can you do anything about it? No, because there will be nothing but evidence also, which also ultimately is like that. All cool? All cool. Come on. Read clause F. Nishan, to the extent possible, you should write the clauses. Read the last one? Okay. Last one only deals with nothing but shares allotted for cash. If at all the company during the year has allotted any shares for cash, the auditor has to receive whether the cash has been actually received or not. Thereafter, ultimately, if the cash is not received, then obviously you cannot show it is received because this is cash. You cannot record cash on accrual basis. So the amount should not be misleading. If it is received, you show it is received. If it is not received, don't show that it is received. Repeating, this particular clause only deals with nothing but shares allotted for cash. So if during the year the company has allotted any shares for cash, auditor has to check whether the cash has been so received or not. And if the cash is received, obviously it should be written that it is received. It should be recorded. If it is not received, then obviously it should not be recorded till the time it is received. Because if you record now, but it is not yet received, then I hope as you are showing misleading number. All cool? Now, just one thing that I want to link with, then we can go forward. Listen carefully. You remember previously we have done section 144. 144, how many services? 9 services, 1 plus 4 plus 4. Acha, those services auditor is allowed to render or not allowed? Not allowed. Can I say if he renders then? Correct. Can I say he's liable to pay penalty? Come on, yeah. Correct, because then he's disqualified, no? So he's liable to pay penalty. Acha, my simple question to you, in that, there was investment banking services. If you people remember, I had given you an example of nothing but the shares only. I told you people that if at all, the company, when they issue shares, they have investment bankers. Now I hope you realize you cannot become an investment banker. Why? Because you have to check the issue of shares. It is your duty to check the issue of shares. That is because of this clause. See, since the auditor has to check whether the shares have been properly issued or not, obviously he cannot help in the issue of shares. Because if he only does issue of shares, how can he check whether the shares are properly issued or not? Therefore, investment banking services were not allowed. All cool? All cool. So how many clauses are there? 6 clauses. What is the first one? Whether the loans and advances which are given are properly secured or not. Second, whether the transactions which are only book entries, whether they are prejudicial or not. Third, whether the investments which are made by the company, whether they are sold below the purchase price or not. Fourth, whether the loans and advances are shown as deposits or not. Fifth, whether personal expenses are charged as business expense in revenue account. Correct. Revenue means P&L. And lastly, whether any shares have been allotted for cash or not. All cool? Come on, first mark it. Then there is one more para that is also important, but first mark this much. Loans and advances made by the company have been properly secured. Transactions, mere book entries, prejudicial. Assets of the company as consist of shares, debentures, and other securities have been sold below the purchase price, that is at a loss. And when I say assets, these are basically, I hope, like your investments. Then loans and advances shown as deposits, personal expenses charged to revenue, and lastly shares allotted for cash. Come on here, all cools? Okay, now there is this one more paragraph. I want you to read that and tell me what that para means. Come on, read it and then write it to me what that para means. Naveen, okay. Come on, yeah. What do you mean by that? Perfect. Correct. Can I say basically that para is trying to tell you if everything is okay, then there is no need to report. But if there is something wrong, if the auditor is not satisfied with any of the matter, can I say only then he has to report? For a simple example, if I tell you that everything is correct except for one point, that personal expenses are charged to revenue. So this is correct or incorrect? Incorrect. Can I say auditor is not satisfied with that? So can I say then the auditor will have to report? But if I tell you everything is properly followed, all the 6 clauses, there is no problem at all, then think and tell. Will the auditor report? No. See, it means reporting here is basically conditional. I hyperize if the auditor is satisfied with all the matters, there is no need to report. And if the auditor is not satisfied with any matter, then there is a duty to report. So it means the reporting here, can I say, is conditional? This is the only section in your entire auditing where the reporting is actually conditional. Apart from this section, everywhere else, wherever there are reporting responsibilities, auditor has to report whether he is satisfied or whether he is not satisfied. This is the only place where he has an option. You understood what I told? Acha. Towards the end, you write down. Here there is space. Write down there. If auditor satisfied with all matters, if auditor not satisfied with any matter. Now think and tell me. First is if the auditor is satisfied with all the matters. Think and tell. Is there a duty to report or no need to report? Correct. Right down. No need to report. What if auditor is not satisfied with any matter? Correct. Then it is the duty to report. Come on, yeah. I hope it was clearer now. So there are too many things which are to be learned in this particular section only. Firstly, it is section 143.1. Duty to inquire on matters. How many matters are there? 6 matters. He will report only when he is not satisfied. It means if he is satisfied, will he report? No. Correct. Now see, obviously this is important from exam point of view. So there is some nonsense which I have done. So please bear. There is a key. It's a nonsensical key, but then you know that is how it is, right? Yeah. The key involves bit of love. Acha. Now can you tell me from where do you do love? Heart. Experienced it seems. Chalo, at least that was unanimous answer because then people tend to think there also. Okay, heart. Okay. You know what is heart known in Hindi? At least that much you know. Heart is known as dil, dil, dil. Okay. So basically, love to happens from the heart, no? Bas, that is only the key. See, love to dil se. It is not that bad, yeah. Love from the heart only, no. One by one. Now listen, no. L stands for loans and advances, don't write, have been properly secured. It's not that bad, yeah. Then TO stands for transactions, vaina, merely book entries. Huh. All creativity you people don't have. Yeah, that far. Then see the heart we will have to break up first, okay? So this dil I have just broken up. It's okay, it's fine. We want answers after all. So loans and advances have been shown as deposits. So this D stands for deposits. Then I stands for investment in shares, debentures, and other securities sold below the purchase price. L stands for it looks as a business expense, but it can be personal. I hope you followed. Hey, come on, yeah, this much is okay. Yeah. Hana, something is better. And lastly, SAY stands for S, shares allotted for cash. See, it's not that difficult then. So how do you remember 140A31? Come on here, tell me. Correct. Love to will say. Acha. Now what stands for what? Can I say where did it go? Yeah. Orange. Come on. L stands for loans and advances properly secured. T stands for transactions merely book entries. D stands for deposits. Okay. Thereafter I investments. Then L stands for it looks as business expense, but it can be personal also. And lastly S shares allotted for cash. This is actually your clause A. This is your clause B. This is your clause D, because D for deposits now. So clause D. Okay, everything D D D D. Thereafter, this investments is basically your clause C, because C and D up and down. Thereafter, ultimately normal. This is your clause E and this is your clause F. Love to dil se. All cool? Come on, go to the key chart. Go, get lost. हाँ, और नहीं तो क्या अच्छा है. हाँ, दिल से रे, दिल से रे. First write the question. What do you write in question? Write down like this. दिल तो आखिर दिल है ना, मीठी सी मुश्किल है ना पिया, 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 पिया. Audit inquiry section 143.1 and then write down key and answer. Where is their SI? Business expense, Ray. It looks as business expense. This is looks. Look. Arey baba, look. It looks as business expense, but can be personal. I told you looks as business expense, but can be personal. So, Rudia, कुछ फायदा नहीं, कुछ नहीं. Come on ya, Dania. Okay, come on. Let's go ahead. Let's go to the next duty. Yeah, come. Thereafter, what we have is nothing but duty to report upon certain matters. Here we'll come later. Okay. It is not that important. It's very simple. Whether books of accounts are maintained or not, accounting standards are followed or not, information is obtained or not. Thereafter, if at all the company has any case against them, then for that, whether any material foreseeable loss is there or not, for them provision is made or not. Thereafter, any director is disqualified or not, branch audit report has been received or not, whether books of accounts and financial statements are in agreement or not, all that. Yeah, come on, next one. Next is section 143.4. It is duty to state reasons for negative report. See, if you give any negative remarks in the report, that financial statements are not showing a true and fair view, can I say there has to be some reason why did you tell that? That reasons has to be told. So it is your duty to give reasons for any negative remarks in your auditor's report. All cool? All cool. So just underline and thereafter read. Come on. Come on. Next one. Next is duty to comply with auditing standards. Common sense. Yeah. Can I say obviously auditing standards are issued by IC AI, but can I say they have to be followed by the auditor? If the auditor does not follow standards on auditing, can I say then he's liable to pay the penalty? Perfect. Now important to understand, standards on auditing issued by ICI, but they are prescribed not by ICI, they are prescribed by central government under section 143.10. So see, it is like accounting standards. Yeah, accounting standards also issued by ICI, but prescribed by central government. So basically what happens, ICI recommends, and then it goes to the Ministry of Corporate Affairs. Then if Ministry of Corporate Affairs thinks that yes, this can become an accounting standard or this can become a standard on auditing, then ultimately I hope they will prescribe it, they will notify it. And once they prescribe or notify, then it becomes a final standard on auditing or a final accounting standard. You understood what I told? Acha. But that is only given in 143.10. Okay. But important here is 143.9. That's the duty. So it is the duty of the auditor to comply or follow with auditing standards. Come on, read both of them. 143.9 and 10. By the way, 133 section is on central government prescribing accounting standards. 143.10 is what? Central government prescribing standards on auditing. See, no, central government may prescribe standards on auditing. Correct. 133 is central government prescribe accounting standards. Come on, now read it. Read it, read it, read it. Come on, yeah, manageable. Come on. NFRA also you people know, huh? In law, addendum is additions. Addendum is basically additions. Additions basically I hope arise other notes along with them. Explanatory notes. Come on. Next is duty to report upon any other matter prescribed by the central government. See, this I cannot tell you now because this, which is covered by section 143.11, is nothing but CARO. If you just go down, go, 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 there will be CARO. See, Caro 2016, which is 0.9. If you check here, there is 143.11. See, do you see? So that same 143.11 is here. So obviously I cannot explain that 143.11 now, because then anyways there is a separate section, separate question. So that will take up later. But yes, if there is any other matter like Caro, which is prescribed by the central government, then it is the duty of the auditor to report on that matter also. Repeating, if there is any matter which is told by the central government that I have to report on that, then it is my duty to report on that other matter also. Come on, next one. 143.12. This is very important. This comes in the examination for 5 to 6 marks. It has come many number of times also. Duty to report fraud to the central government. Okay, come on. Now I want you to read it entirely. It's big. Come on, read it, then I'll explain you. Come on, finish it off. Read it entirely, huh? Done? Okay, now listen carefully. Yeah? Firstly, I hope you realize you are talking about section 143.12, which is duty to report fraud to the central government. Now, supposing say I am auditor Mr. R. Okay, now I'm checking the financial statements. In checking the financial financial statements, say I come to know about a certain fraud. Say the amount of the fraud is greater than or equal to 1 CR. But this fraud, when I talk, I'm talking about an individual fraud. I am not talking about all the frauds put together. It means during the course of audit, I may have come across many number of frauds. Correct. Now, I am not talking that the total of this fraud is greater than equal to 1 CR. No. Say out of these frauds, this fraud, which I now got, say this is greater than or equal to 1 CR. It means you are talking about that individual fraud which is greater than equal to 1 CR. You are not talking about the cumulative fraud. So any fraud which you people get, which is greater than equal to 1 CR, that has to be reported. You understood what I told? So supposing if at all there are many frauds and the total is 1 crore, do you have to report? No. But if I tell you there is only one fraud which is greater than equal to 1 CR, then do you have to report? Yes. So I hope that individual fraud should be greater than equal to 1 CR. Then as soon as I come to know about this fraud, okay, I will have to first tell to the BOD or audit committee, as the case may be. Now, important to understand, BOD, you already know what is audit committee. Audit committee is a group of people which ultimately helps in the function of auditing. So audit committee will help in the appointment of an auditor, selection of an auditor, fixing the remuneration of an auditor. Audit committee is not compulsory for all the companies. It is compulsory only for the companies which are covered by section 177, which we will take up in the next lecture. So in the next lecture, I will tell you that when is the company correct required to constitute an audit committee. It is basically two companies only, listed and unlisted. Private is not there. Okay, so that I will tell you later. As of now, understand, if there is an audit committee, then you'll have to tell it to audit committee. If there is no audit committee, then you'll have to tell it to the BOD. Okay, so whatever is the fraud which I come to know, I auditor, I am Mr. R, auditor, I have to tell it to the BOD or audit committee within maximum how many days? 2 days from the knowledge of the fraud. It cannot be later than 2 days. Within 2 days, I have to tell to the BOD or audit committee. Not only that, I have to then tell to them, Baba, you now have to reply to me. So you reply that what about this fraud? You have to give me nothing but your observations. You have to give me comments on that. Who will give observations and comments? BOD. To whom? Auditor. Basically, what will the BOD tell? What is the nature of the fraud? For a simple example, I hope is whether it is manipulation of nothing but cash or stock or fixed assets, or ultimately I hope is something like window dressing, where they have inflated the value of the assets than their actual value. Okay, all that type of frauds also we will learn in detail when I do chapter number 5, which is only on frauds. As of now, understand, say it is window dressing, which is showing a better picture than currently, inflating everything. Then in that scenario, use common sense. So they will have to tell what is the nature of the fraud, amount of the fraud, who did the fraud. So then the BOD or audit committee will have to reply to the auditor within how many days? 45 days. Now, after the reply is got, within how many days? 45 days. Thereafter, then the auditor will then have to report to the central government. And you will have to report to the central government where? To the Ministry of Corporate Affairs. Acha, you will report how? You will do it orally, like go and in loudspeaker you will do? No. Can I say obviously it will happen in a certain form? This happens in basically form, if you have read ADT4. It means form ADT4 is basically on fraud reporting. But obviously auditor will give this reply, whatever they have given, along with auditor's comments. So if the auditor wants to add his comments, can he add? Yes. Where will he add? How will he report? He will report on his letterhead. So it will be Mr. R's letterhead. You understand letterhead? Basically, letterhead is what? It is a piece of paper which has my name on it. Supposing if I'm Mr. R auditor, then it has my name on it. Mr. R auditor chartered accountant. Thereafter, it has my all contact details. It has my email ID, it has my telephone number, etc. So ultimately, I will have to report this on my letterhead, which I will have to send it to MCA. But I will send it to whom? Correct. MCA where? I will have to send it to the secretary of MCA. And I will have to report this in speed post. And this I have to report within maximum period of 15 days. Not only that, at the end, I will have to put my signature, obviously along with my membership number also. You understand membership number? Just like you people have your student registration number. If I'm not wrong, SRO, SRO, SRO. Correct. We people also used to have WRO because we are Western India, no? Acha, once you become chartered accountants, you people get a 6-digit membership number. That membership number has to be quoted in every communication, whichever happens, once you become a chartered accountant. So ultimately, I hope that your membership number also has to be written. Like I have the membership number 138-2. Yeah. So basically, I hope realize, see, understand what happened now first. Firstly, the auditor, he comes to know about a fraud, which is individually greater than equal to 1 CR. Then he has to report within 2 days of the knowledge of the fraud to the BOD or audit committee, and he has to seek their reply within a period of 45 days. Okay, reply, that is observation. You please give me nothing but in writing who did this fraud, what is the amount of the fraud, nature of the fraud. Thereafter, the auditor in a speed post within 15 days, he has to report to the CG, to whom? MCA, to the secretary. Acha. And the auditor also can give comments upon nothing but this fraud, in nothing but on the letterhead of the auditor, obviously mentioning what? His signature, his membership number, his contact details, including email ID. And this will happen in the form. Which form? ADT4. In other words, he also has to submit nothing but form ADT4. You understood entirely? But wait, last thing which you need to know. Who has to give observations to whom? Reply? BOD. BOD has to reply to the auditor within how many days? 45 days. Say within 45 days, you did not receive the reply. Means BOD did not reply to the auditor. So auditor did not receive the reply from the BOD. Then what to do? Then you still have to tell to the central government in a note that I who auditor have not received the reply from the BOD. Repeating, obviously you have to send this reply along with your comments to the central government. Reply of the BOD plus your comments on that to the central government. Now, supposing if I tell you reply is not received from the BOD, then obviously this is not there, no? So at least you tell to the CG that reply is not there. So write in a note that reply which should have been there, it is not there. Why? Because BOD has not sent. One more thing, 45 days BOD have to reply to the auditor. Then next 15 days, auditor has to reply to the CG. It means CG has to be replied in total how many days? 60 days. Correct. See, these 2 days are included in 45. Huh? They are not extra 2 days. So basically, I hope it is 45 plus 15. So CG has to be replied or has to be told within how many days? 60 days. All cool? Acha, one more thing. This is when the fraud is greater than equal to 1 CR. What if the fraud is less than 1 CR? Then do you have to reply to CG? No. For the fraud which is less than 1 CR, you don't have to reply to the CG. But 2 reportings are required. 1, auditor has to report. Acha, one more thing. Again, the auditor, what he will do is, he will have to tell it to the BOD or the audit committee as the case may be. Within how many days? Maximum 2 days from the knowledge of the fraud. Not only that, then in the auditor's report, he has to mention the nature of the fraud, like window dressing, the amount of the fraud, whichever may be there. Obviously, this amount will be less than 1 CR. And the parties which are involved in the fraud. On the other hand, second thing, you also have to disclose this in board's report. You know, there is director's report. Bus. In that director's report also, they will have to disclose. Who will disclose? BOD. What will they disclose? Nature of the fraud, amount of the fraud, obviously, which is less than 1 CR. The parties involved. If you see all the 3 same things. Lastly, which is the different one, remedial action taken, if any. You understand remedial action taken? Obviously, if there is a fraud, you'll have to correct it also, no? then ultimately whether for that the remedial action is taken or not. Remedial is corrective action. All cools? Understand entirely, and then I'll make you mark. Wait. Firstly, I hope let us talk about reporting to the CG. If you are the auditor and if you find a fraud which is greater than equal to 1 CR individually, then you'll have to report within maximum 2 days of the knowledge of the fraud to the BOD or the audit committee as the case may be. Acha, thereafter, seeking their reply or observation within how many days? 45 days. Acha, thereafter, within the next 15 days in a speed post, you will have to report to the central government along with the comments on the reply of the BOD, and you will have to report to the Secretary, Ministry of Corporate Affairs. And this reporting will happen in form ADT4, which will mention nothing on the letterhead of the auditor, which should mention what the signature of the auditor, the membership number of the auditor, the telephone number of the auditor, the contact details, and the email ID. Thereafter, if you have not received the reply from the BOD, then I hope you at least have to tell to the CG in a note that I, the auditor, has not received the reply. But you will have to reply at least to the central government. Thereafter, for frauds which are less than 1 CR, you don't have to report to the CG, but two reportings are required. One, auditor's report, he will report. Second, board's report. In auditor's report, obviously, first you have to tell to the BOD or audit committee within 2 days of the knowledge of the fraud. And thereafter, you have to report in your report, nature of the fraud, amount of the fraud, and parties involved. On the other hand, board's report, first three remaining the same. Lastly, remedial action taken, if any. All cool? This entire process, which I just told to you, this process is covered by Rule 13 of CAR 2014. If you people remember, I hope previously also there was one rule, Rule 7. And that Rule 7 was removal. If you remember seven letters removal, you remember I did nonsense. Here I don't know how much nonsense I will be able to do, but then I'll try. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Fraud which is 1 CR. Only if the fraud is 1 CR or more, only are no, are no, yeah. No, yeah, it's okay, yeah. It's okay, yeah. So that is how we remember Rule 13. All cool? All cool. Come, textbook. It was not that bad, yeah. Chumma telling me. In exam, when you will remember this nonsense and you will write Rule 13, that is the time when you will give some credit at least. Huh. Till then, yeah, you will be like, so much nonsensical brain this man has. So rude. Come on, mark it. Fraud amount of 1 crore or above. The auditor shall report the matter to the central government. The manner of reporting is important. The auditor report to the BOD or audit committee, but not later than 2 days of the knowledge of the fraud, seeking their reply or observations within 45 days. On the receipt of such reply or observation, auditor forward his report and reply with his comments to the central government within 15 days from the date of receipt of such reply or observation. चलेगा रे देख तू चला वैसे वो लाइन पे. Thereafter, in case the auditor fails to get any reply from the BOD or audit committee within the stipulated time of 45 days, he shall forward his report at least to the central government along with a note containing details of his report, for which he has not received any reply. Yeah, definitely. Then the report shall be sent to the Secretary, Ministry of Corporate Affairs, in a sealed cover, as if we are going to keep it open, in a registered post or by a speed post, followed by an email for confirmation. Thereafter, the report will be on the letterhead of the auditor, containing postal address, email address, contact number, mobile number, signed by the auditor with a seal and membership number. And the report will be in the form of a statement, Form ADT4. Thereafter, in case of fraud which is lesser than the amount, that is less than 1 year, then the auditor shall report to the audit committee or the board not later than 2 days from the knowledge of the fraud, and he shall report specifying the following: nature of the fraud, amount, and parties involved. Secondly, the company is also required to disclose in the board's report the details of each fraud reported to the audit committee or BOD. What will they disclose? Nature of the fraud, amount involved, parties involved, and remedial actions taken. See, once you understand that chart, now then it is not difficult, but you have to understand that basically. If you understand that, then it is fair enough. Then you can write in your words. Initially, it was seeming difficult that what is all this nonsense, what they are trying to tell. But once you understand the flow, now then it is fair. Acknowledgement due is whenever you have a speed post, you get an acknowledgement, right? That is known as acknowledgement. That postal office will give you an acknowledgement that yes, you have done the such a speed post. That is the meaning. So in total, you have to report to the central government in 60 days, 45 days BOD, and 15 days central government. So in totality, you have to tell to the central government in 60 days. This is the chart for all those who are telling. Vidhi correct. Yes, Rahul. धनिया तूने तो फोटो लिया ना. रुक 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 रुक. धनिया, come on. Now, what I wanted to come to is the textbook because one duty is remaining. Let us just finish it off. Then we just make a small note of it. Then we take the short break. After the break, we come, we people do penalties and we do joint audit. And after joint audit, we people do thanks for coming. Come, let's do it. Textbook, please. Second one, duty to report on certain matters. Certain matters. Come on, read it. I'm just marking for you. I already told you here whether the books of accounts are kept properly or not, whether information explanation is got or not, accounting standards are followed or not, director is disqualified or not, then whether there is any adverse remark relating to maintenance of account. Supposing accounts has to be written on accrual, but they are not written on accrual, so that you have to report whether the branch audit report has been properly received or not, whether any director is disqualified or not, whether they have proper internal financial controls or not. Similarly, thereafter, for any pending cases, whether ultimately if there is a chance they will lose, whether for that they have made adequate provision or not. You understood what I told? Yeah, all that. Read. Come on, finish it. You can also mark, okay, once you people read. They're very simple, yeah. This clause I is not applicable to certain companies, okay? It is not applicable to private company, which is a one person company or a small company, and which has a turnover of less than 50 crores and outstanding loans less than 25 crores. You understand pending litigations, right? Pending cases. Supposing if there is a case going on against the company and say that particular person has claimed damages also, then can I say obviously there is a chance if you lose the case, you will have to pay the damages. So it is better that you people make a provision. Correct. Acha, you already know what is Investors Education and Protection Fund. Can I say timely you have to transfer to that? Correct. Those three lines are for this three. This is J1, J2, and J3. Come on, Adanya. Come. In the done no. नीचे ऐसा. By the way, the director is disqualified as per section 164.2. Huh? This 164.2 is not covered at inter CA level. This 164.2 is covered at CA final level. When the director is disqualified, you people will know at CA final level. As of now, you just have to understand that if the director is disqualified, it is your duty to report. Huh. Director is basically disqualified when is insane, insolvent, financial statements are not filed with the ROC for 3 years. Then in those cases, the directors become disqualified. But that is not what you have to learn. 164.2 is not what you have to learn. You have to just learn here that if 164.2 is attracted, it is your duty to report that director is disqualified. Like that. Derivative contracts you will not learn here. See, it is here, no, including derivative contracts. It is covered at CA final level FM. Even if I try to tell you derivatives, you will not understand. Come on, Adania. Come on, come to the notebooks. In the notebooks, I think you have written like this, no? What are the duties of an auditor? But see, it is still blank. Can I say at least you will write the duties, headings, one by one? Come on, write down, answer. The following are the duties. Da, 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 da. One by one. First, duty to inquire on certain matters. This is section 143.1. Reporting here was optional. If satisfied, no report. Not satisfied, duty to report. Second was duty to report on certain matters. This was covered by section 143.3. Which was the next duty? Huh? Duty to give reasons. Check now, which was the third one. I think normally it will be that only, but let's just see. Duty to state reasons for negative report. So write down duty to state reasons for negative remarks in report. Section 143.4. After that, what is there here? That CG thing. No, accounting, auditing standards first. 143.9. Duty to comply auditing standards. Complies follow. Next, duty to report on any other matter of the CG. Next, duty to report fraud to the CG. Duty to sign the audit report. And lastly, duty to attend general meetings. First one important and sixth one important. I'm not telling others are not important, but these two are more important than the others. Asked in the examination for short notes, proper questions for 4 to 5 to 6 marks. Come on, Dania. With this, what we have finished is nothing but duties of an auditor. Obviously, it took a while, but then, yeah, we had to do it in detail, so we have done. All cools? Shall we take breaks? Okay, 8:10 it is. Tell me how much? 10 minutes? 10 is fine. 15. Why do you bargain, yeah? Why is such bargaining chip, yeah? Huh? Shall not yours, not mine. In between 12 minutes. I'll come back at 8:22. So, bye. Okay, come back. Okay. The next thing that we people have to do is basically section 147, which is on penalties of an auditor. Actually, it is not only penalties for an auditor, it is also penalties for the company and the management. It is because I hope that even they can be wrong. In an audit, if you people appreciate, there are two parties to audit. One is the auditor, other is the management. So every time auditor cannot be wrong, management also can be wrong. So our management also penalized? Yes. All the penalties are covered by section 147. There were no penalty provisions in the Companies Act 1956. Thereafter, when the Satyam fiasco happened, thereafter Ministry of Corporate Affairs, they thought that yes, there has to be penalties for the auditor and the management in the Companies Act also. So thereafter, when the Companies Act 2013 came, thereafter in the Companies Act 2013, there came section 147, and then came the penalties for the company and the auditors. Now, firstly, why do you pay the penalty? For doing something properly or not doing? Not doing. So for following something or not following? Not following. Correct. So see, firstly, I hope you realize the penalty, don't copy, huh? Copy later. Anyways, I'll give you time. As of now, just understand what I'm trying to explain. Okay. Firstly, I hope you realize the penalties can be for the company and its officers. Secondly, it may be for the auditors. For the company and its officers, when for contravention of section 139 to 146. Wait, what do you mean by contravention? Contravention is not following something. Now, when I say section 139 to 146, both the sections inclusive, you are not talking only about the sections which are in between them. You are not talking from 140 to 145. No, from 139 to 146. Just to give you a simple example, uh, can you tell me who should appoint the first auditor of a non-government company? Board of directors. Correct. Within how many days? 30 days from the date of incorporation or registration. Do you agree? Now, supposing if I tell you managing director himself appointed the first auditor, is it okay? No. Why? Because managing director may be a part of the BOD, but he is not BOD himself. And therefore, the appointment is valid or invalid? Invalid. Then ultimately, can I say you are liable to pay a penalty? One more example. You remember 143 at branch audit we had revised today? Acha, can you tell me who appoints the branch auditor? Shareholders. Acha, can the BOD appoint? Yes, but only if delegated by the shareholders. What if I tell you BOD have directly appointed without any delegation? Is it okay? No. Then have they followed that section? No. Have they contravened it? Yes. So are they now liable to pay the penalty? Yes. Now do you understand? So basically, I hope you realize if at all you have contravened any sections from 139 to 146, you are liable to pay penalty. They are liable under section 147 subsection 1. In that, if you see, there are two parties, company and its officers. So two parties, so company and their officers. Can I say company is a separate legal identity? Now, what is the fine for the company? Very simple. Here the fine is not less than 25,000, which may extend to rupees 5 lakhs. So it will be minimum how much? 25,000. Maximum how much? 5 lakhs. Who will decide the amount? Court of law. So according to the harsh test of the case, the court of law will decide whether the fine should be more towards 25,000 or more towards 5 lakh. Acha, but minimum 25, maximum 5. Now, what about officers? Here, firstly, they are liable for imprisonment, which may extend to 1 year. Important, which can extend to 1 year. It cannot be more than 1 year. And also it is 1 year or less. It means they can be in the jail for 1 day, 2 day, 3 days, 1 week, 2 week, 3 weeks, 4 weeks, 4 months, 5 months. But maximum they can be is for 1 year, or fine, which is not less than 10,000, which may extend to rupees 1 lakh, or both. What do you mean by both? Correct. Pay the fine also, go to the jail also. So ultimately, I hope rise it is three things here. Officers, firstly, imprisonment for a term which may extend to 1 year, fine which is not less than 10,000, which may extend to 1 lakh, or both, that is pay and go. See how to remember, very simple. Company cannot be imprisoned, no. Company is a separate legal identity. Company cannot be imprisoned. No, the company cannot put behind bars. So eventually company can only pay fine. So ultimately in case of company C, there is only fine. But when you talk about officers, can you imprison officers? Yes. And therefore you start with imprisonment. And 1 year, 10,000, 1 lakh or both. All cool? All cool. Now talking about the auditors, because we are more focused on auditors. Okay. When you people talk about auditors, again, when are they penalized for not following something? Not following is contravention. But here there are specific sections: 139, 143, 144, 145, 146. If you remember, 139 was regarding all casual vacancy, appointment of an auditor, rotation of an auditor, everything. 143, if you remember, just a while back, we have done rights and duties. If you check, 143 is all rights and duties. I'll make you check. Wait. If you check here, see, these are the rights: 143 1, 143 2. Thereafter, if you see, everything is in duty. See, 143 1, 143 3, 143 4. See, 143s. So all the 143s, if you people appreciate, are basically nothing but duties. Correct. Thereafter, 144, if you remember, 9 services. Hello. Correct. If you imandari, if at all you people render, you are disqualified, you are penalized. 145, we have done today only. If you remember, signature. Hello. And 146, if you remember, duty to attend general meetings. If you don't attend, you are liable to pay penalty. Now do you understand? So auditor is basically penalized for contravention of sections 139, 143, 144, 145, 146. Now here he is penalized under two sections, 147.2 and 147.3. 147.3 is basically conditional. So first let us talk about 147.2. Then I will go to 147.3. When you talk about 147.2, so two branches. One, auditor is liable to pay a fine not less than 25,000, which may extend to rupees 5 lakhs, or 4 times auditor's remuneration, whichever is less. Let us understand. Minimum how much? 25. Maximum how much? 5. If you people appreciate, same fine. See, here and here it's the same thing. Supposing if I tell you that the court of law has decided 3 lakh rupees. Now say auditor's remuneration is 1 lakh rupees. So when you take 4 times, it will become 4 lakhs. So now you compare 3 lakhs and 4 lakhs, and your final fine will be whichever is less. So out of 3 lakh and 4 lakh, what will be your final fine? It will be nothing but 3 lakh rupees. Now do you understand? Okay. This or that, correct. On the other hand, I hope realize second part, knowingly, willfully, or intentionally. See, when I say knowingly, willfully, or intentionally, can I say you have done it on intention? What? See ahead. Contravened any provision to deceive the company, shareholders, creditors, or tax authorities. Now see, you have knowingly contravened anything. In other words, can I say you have committed a fraud? Acha, to deceive somebody. What do you mean by deceive? Cheat. Acha, cheat whom? Either the company, the shareholders of the company, the creditors of the company, and the tax authorities. Then can I say, obviously this is more harsh. So can I say fine will be more harsh? So can I say liability will be definitely more? So check. Firstly, auditor is liable for imprisonment 1 year. What is this? Same this. For a term which may extend to. Same thing. Okay. Acha, so maximum 1 year imprisonment and a fine which is not less than 50,000, which may extend to rupees 25 lakhs, or 8 times auditor's remuneration, whichever is less. Luckily, I hope it is whichever is less. Okay. But yes, supposing auditor's remuneration also can be huge. For a simple example, I hope some auditors remuneration are 3 lakhs, 4 lakhs, 10 lakhs, 50 lakhs also. Supposing I tell you that it is nothing but say 20 lakhs, then this will come to 1.6 CR. And here if it is 25 lakhs, luckily auditor will be only paying 25 lakhs because it is whichever is lower. I hope you followed. Acha. So wait, first is imprisonment, which can extend to 1 year, or fine not less than 50,000, which may extend to rupees 25 lakhs, or 8 times auditor's remuneration, whichever is less. Initially, no, this 4 times and 8 times were not there. They were amended later. Initially, it was only till this 5 lakhs and this 25 lakhs. Later on, they amended and they brought 4 times and 8 times respectively. So obviously we have to learn amended only. Initially it was not there. Acha, now wait. This was ultimately, I hope, as if you have done something knowingly, correct? If this was not enough, then see here there is a star. That star is here. Reference. If you are convicted under section 147.2, wait, what is the condition? This is the condition. If you are convicted under section 147.2, you understand the meaning? It means you committed a fraud. Now, because of that fraud, there is a case also which is registered. And in that case registered, say you people get the judgment that you are a convict. So can I say you are convicted? So obviously you are disqualified. Not only that, if you are a convict, what gets attracted is 147.3. It means if you are convicted under 147.2, check. Then what is attracted is section 147.3. Then as per section 147.3, what further penalty you have? 1. Refund the remuneration received back to the company. So whatever 20 lakhs remuneration you people had, that also you'll have to refund back. Not only that, and see, pay the damages to any company, person, authority, shareholders, creditors for any loss arising out of misleading or wrong information in his auditor's report. You understand the meaning of that? So simple. If say auditor has given a wrong report, I rely on that report and I take a decision. But because of that decision, I faced a loss. So I have faced a loss because of the auditor's wrong report. So whatever loss I have suffered, can I say auditor should make that loss good? How will you do that? By paying damages. So that is the meaning of knowing pay damages. All cool? Wait. Understand all three situations of auditor, huh? Wait. Firstly, 147.2, there were two branches. Right branch, if you check, it is knowingly, willfully. Then what is this left branch for? Unknowingly. I hope as you can also do something wrong unknowingly. Na? See, it is through an error. Check. See. Error. It means if you have done something unintentionally, but you have done something wrong, then also you are liable to pay something. No, yaar. Repeating. If you have done something wrong, but unintentionally, but still it is wrong, no? So still you are liable to pay something, no? That is nothing but the left hand side for fine, whatever is there. Right hand side deals with only fraud. Come on. Now, because of that fraud, if there is a case, see, every time there is a fraud, there is no case. Sometimes you pay penalty, that's it. But if there is a case also which is registered, and in that case you become a convict, then 147.3 is attracted. Then you'll have to refund remuneration and you have to pay damages. You understood what I told? Let me see how much you are able to grasp. Okay. Supposing if I tell you auditor did something wrong unknowingly, which type of a fine? Left or right? Left. Okay. He did something wrong knowingly. Right. Okay. There was no case registered. Then only that right wala. Correct. Then only whatever is written here you have to pay. But what if I tell you he did something wrong intentionally? Right. Plus there is a case. No, wait. I just told there is a case. I did not say there is a convict. Plus there is a case and he became a convict. Then right also and this down also. 147.3. Now are you able to understand situations? Correct. All cool? All cool. Come on, knock it off. Finish it. Yeah. If you're auditors of Reliance, what else do you need? Crores and crores. Fine is to nothing. Whichever is less, no. Exactly. There is no maximum remuneration. How much so ever you can get. Yeah, yeah, auditors definitely are. They do earn in crores. If at all it's a public limited company, all the fees are in crores only. But normally all the public limited company audit goes to big fours. Yeah, so big fours basically, why are they big fours? Because they get money also big, no? Exactly. SR Bartley Boy, EY. SR Bartley Boy is basically EY only. SR Bartley Boy is just another firm name, network firms. But that is EY only. Bartley Boy. Hey, come on, yeah, done, yeah. Come on, last minute, finish it off. Then we have the last question, and then thanks for coming. To the extent possible, everything, yeah. Like at least the subsections. If not, then at least okay. If you write section for once, then also it's fine. Yeah, but if you don't know the section also, then as per relevant section, then let them decide what is relevant. We don't decide anything further. Then. Yeah, all that I'll tell you how to prepare, etc. with that paper pattern and all that. That is in the last lecture. Yeah. Not now. Come on, yeah, done, yeah, done, yeah, done, yeah. And fast, yeah, last minute, yeah. How much you copy? Right, so it's big answer, yeah. Oh. Hungry, yeah. Early in the morning, 6:30. I mean, what do you expect? See, first you are sleepy. तो रहने दे. ये क्या है? कुरकुरे? क्या है? लिख के भेज क्या है? Yeah. Early in the morning, एक तो you are sleepy. Then I hope realize you tend to get hungry. So everything at 6:30, you know. I know. Oh, bada. दिखा नहीं ऐसा. दिखा दिखा. So no. Come on here, Dhania. Okay, come on. Shall we go to the last one then? Let's knock it off. Even if it's like a bit early, I mean, we can go and have breakfast, right? Yeah. Come. Let's do it. Let's do it. Let's do it. Do it. Do it. Come, 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 come. Right on. Question. Right on. What is joint audit? And what are its advantages and disadvantages? Come on here, everybody till here. Okay. Now let us discuss first. Thereafter, we shall write it together. Listen. As the name suggests, joint audit, think and tell me. Joint audit means there'll be one auditor or more than one. More than one. It is beneficial for small companies or large, where there are many number of transactions. It is very difficult for a single person to carry out the entire audit only by himself. Therefore, it is necessary for there to be one more person doing that audit. Such an audit is known as joint audit, and such auditors are known as joint auditors. Perfect. You understood the entire thing what I told? So, nahin so rude, yeah. So can I say basically joint audit is beneficial in case of small companies or large?
Large, where there are many number of transactions. It is very difficult for a single person to carry out the entire audit only by himself. Therefore, it is necessary for there to be one more person carrying out the same audit. Such an audit is known as joint audit, and such auditors are known as joint auditors. Correct. So joint auditors are appointed in case of big companies. Now think and tell me, when you people appoint joint auditors, can I say obviously some work amongst them will be divided and some work will be common. So for a simple example, say I and you, say we together are nothing but joint auditors. So can I say I will take some work, you will take some work, and other work obviously we both will take together. Do you agree? Okay. Now think and answer. Huh? This is the most important question. In case of a joint audit, the joint auditors are jointly responsible or individually responsible? Think first, think. Again, repeating. In case of joint audit, the joint auditors are jointly responsible or individually responsible? Come on here, jointly or individually? Can I say by default jointly? By default, what you are telling is correct, but it is not entirely correct. Whether they are jointly responsible or whether they are individually responsible, the answer, it depends. And it depends upon one thing, division of work. Repeating, whether the joint auditors are jointly responsible or individually responsible, I hope as the correct answer, it depends. It depends upon the division of work, whether the work is divided or not. Now, supposing I tell you, say, there are X Limited big company, say two auditors are there now, say Mr. R and Mr. S. So can I say it's a joint audit? Come on here. Achha. Now say Mr. R, he takes up purchases. They have divided the work. And say Mr. S, he takes up sales. Now think and answer. Huh? If there is some problem with respect to purchases, will Mr. S take up liability? No. Mr. S will tell what? Are Baba, I purchase illa responsible. Mr. R responsible. Mr. R responsible. So I'm not responsible. Similarly, if there is some problem with respect to correct. I hope like sales. Will Mr. R take up the responsibility? No. What will Mr. R say? I am not responsible, Baba. Who is responsible is Mr. S. Don't catch me. Catch him. It means when the work is divided. Can I say they are individually responsible? Come on, yeah. But if I tell you work is not divided, ayo, work is only not divided. Now, if there is any problem with respect to purchases, can I say both of them are responsible? Catch both of them, bloody. Asha, if there is some problem with respect to sale, work is not divided. Catch both of them, bloody. They are responsible. It means for the work which is divided, they are individually responsible. And for the work which is not divided, then common. Correct. Are work not divided, then together, no. Then common. Work divided, see, two hands, individually, no. Dash, common sense it is. Exactly. Like this. All cool. All cool. One more thing. Think and answer. Think. One joint auditor is always bound by the views of the other joint auditor. True or false? Repeating. One joint auditor is always bound. Bound means obliged. He always has to follow. Is always bound by the views of the other joint auditor. Come on, correct or incorrect? Is it true? Is he bound by the views of the other joint auditor? Whatever he's telling, I have to follow. No. Can I say both of them are independent persons? Hello. I hope as S is not dependent on R is not dependent on S. And both of them are definitely not dependent on X limit. So can I say obviously they are independent people. And therefore, ultimately, I hope as whatever is told by one joint auditor, other is not bound by the views. If at all the other wants, he may or may not accept depending upon his own judgment. Now do you understand? Achha. Think something more and tell me. At the end, what do you think? They will give separate reports or joint audit report? Correct. Can I say what they will give is a joint audit report? Correct. Can I say they, obviously both of them have to sign up because it's a joint audit. Achha. Can I say their report also will be common? If Mr. R is telling there is no true and fair view, S will also tell no true and fair view. Okay, that is real life. Let us talk theoretical. However, is it possible that both of them may have a separate opinion? Possible. For a simple example, Mr. R will tell there is true and fair view. Mr. S will tell there is no true and fair view. So is it possible? Possible. If that happens, can both of them give a separate opinion? Yes, they can. Because both of them are independent people. Both of them have a right to give their own opinion. However, in real life, the opinion is same. So they give a common joint audit report. But if the opinion is not same, then theoretically, you can give a separate opinion also. But then there is a problem. If you give a separate opinion, then what will happen? Then ultimately, I hope our shareholders, what will they do? Toss. Heads Mr. R, tails Mr. S. See, it is laughable. Why? Because it is not actually which happens. But it may happen theoretically. In my example only, I have taken joint auditors as two auditors, and there can be more than two joint auditors also. There can be three, there can be four. But normally, I hope they don't keep more than two. It is because I hope more the people, more the problems. That is how the life also works. It is on that universal rule. More the people, more the problems. What do you think here? I'm here to give you life lessons. Then make one 50 pages book, Rahul's life lessons. At the end, we will learn life lessons also along with auditing. What do you say? Shut up and pay attention. Huh? Answer properly. Wait. Joint audit is beneficial for small companies. Huh? No, big companies. Correct. Where the business is large. Many number. Okay. Joint auditors are always jointly responsible. No. Can I say responsibility depends upon division of work? If the work is divided, then individually. If the work is not divided, then jointly. Perfect. Achha. Thereafter, one joint auditor is always bound by the views of the other joint auditor. No, yeah. Achha. At the end, they will give a individual report only every time. No, they will give a common joint audit report. But then, can they give a separate opinion? Yes, because they are independent people to do so. All cools? All cools. Now, we have to talk about advantages and disadvantages. Come on. Tell me the advantages of doing joint audit. Come on, shoot. Tell me. If you do audit together, what advantages will it have? Sharam can be completed within time. Specialization is nice. Division of work, burden of the work is less, very nice. Less workload is perfect. Reliable, okay. Some are telling more money, shut up. What more money? Mad. For joint audit, ultimately client will not pay you more money. Client has that much money only. Risk sharing, less time, okay, more skill, okay. Some people have just given up. They're like, whatever you tell. Thereafter, more specific details, many options, many opinion. Okay, I thought many options. Yeah. Okay, different opinion. High expertise is nice. I likes. Array, different opinions you people are telling in advantages. I am asking you advantages, not disadvantages. Reduction of mistakes as both of them give it perfectly. Okay, more stringent audit. Sampling can be more efficiency. Okay. Okay, less time. Okay, fair enough. Listen, shut up now. Basically, the advantages are really simple. See, can I say the biggest advantage is ultimately there is always an advantage of mutual consultation. If there is a problem which arises, I can definitely consult the other auditor, which cannot happen in case of individual auditors. So there is advantage of mutual consultation. If you people appreciate there is sharing of expertise, whatever expertise I have, I can always share with the other. Acha. Apart from that, can I say obviously if there is more than one person, can I say obviously the workload will reduce. So my efficiency will increase. So my performance to the client will become worse or will become better? Better. And if you people appreciate the cost to do audit will also get decreased, no? Because it will get divided. Array, when you people do audit, you have to incur cost also, no? You have to pay your assistant stipend. You have to pay employees the salary, whosoever are working for auditor. So now if there is more than one person, obviously that person also will share the cost also, no? So can I say cost also will get reduced? So basically, what are the advantages? Very simple advantages. Firstly, I hope there is advantage of mutual consultation, sharing of expertise, reduces workload, so efficiency increases, better performance to the client, and yeah, the cost reduction. All cool? Come on, disadvantages. Come on, shoot. Disadvantages, please. Think. Disadvantages of doing joint audits. Sometimes doing something together also has problems. Disputes, okay. Conflicts, okay. Fair enough. Quarrels, okay. Why so many quarrels? Yeah, both of them females. Yeah, Mister. No, no. Okay. Then difference in opinion, fair enough. Civil war. Yeah. Slowly and steadily, so you will tell ultimately, civil war, end game only. Acha. In between, there was sharing of fees, which was perfect. Sharing of fees is perfect. Many collude. Expensive to the client. Not expensive to the client. Why expensive to the client? Client has to pay that much money only. Ego issues. Perfect. Ankita, nice. Ego issues is right. No clear conclusion. Okay. Personal clashes. Personal. Uh-huh. Okay. No clear conclusions is fine. Apart from that, anything? Think now. Nobody takes responsibility. Perfect. For the work which is not divided, nobody takes responsibility. Perfect. Domination. Correct. Dominance over the other. Very nice. You know, when can domination happen over the other? When both of them are not of the same level, when they are of different levels. For a simple example, I tell you, one is experienced, other is inexperienced, like that. Okay. See, fair enough. Decent answers. Listen. Firstly, the biggest disadvantage is that the fees will be shared. So whatever is audit income, audit fees, can I say that will be shared? So since you have to share, you will not get entire. So that is a disadvantage. Secondly, if you people appreciate, there is always a superiority complex, especially when the forms of different standings are there. Superiority complex, ego issues after all. For a simple example, if I tell you, say, I am Mr. R, okay, but say I am 10 years experienced. Say you are Mr. S, but you are less than 1 year in experience. It means you are highly inexperienced. Now, since the firms are of the same standing or different standing, different standing, one is experienced, other is inexperienced. Can I say, I may try to dominate you? And I will always try and tell, I'm experienced now, so whatever I'm telling is correct. You understand? You newcomer, you dash, relax, sit down, do as I say. Then use comments. That will happen. Why? Because the firms are of the same standing or different standings. Different standings. So can I say superiority complex can always happen? Acha. Similarly, I hope realize psychological problems where the firms are of different standings. One may try to dominate the other. Acha. Then there is a problem in coordinating the work, dividing the work. For a simple example, if I tell you there is something like, say, cash. Now, Mr. R is telling, I will check cash. Mr. S is telling, I will check cash. Now, the problem is both want to check cash. Now, what you will tear cash? There is a problem. What to do? So, there is a problem in coordinating the work. Acha. There may also be a problem. Say there is something like vouchers. Cash both wanted to do. Vouchers nobody wants to do. Mr. R is telling voucher, I will not do. It is very boring. Mr. S is telling, I also will not do. It is very boring for me also. So now the problem is voucher is not divided only. So voucher is common work. But that common work nobody is doing. Neither Mr. R is doing, nor Mr. S is doing. In other words, that common work is getting neglected. It means what are the disadvantages? They're very simple also. They're very logical also. Firstly, the fees being shared. Then there is a superiority complex which comes. Then there is always a psychological problems, especially when the firms are of different standings. Standing means correct, experience basically. Thereafter, ultimately, there is a problem in coordination of work. And there is a problem that the common work which is there, which is not divided. Common work is the work which is not divided. That work always gets neglected. Nobody takes up that. Now do you follow? Okay, so these are the advantages and disadvantages. In exams, advantages gets asked individually for 5 marks and disadvantages gets asked individually for 5 marks. So 5 marks, 5 marks. If it comes entirely, it will come for 8 to 10 marks, the entire answer. Last thing which you need to know, this joint audit that we people are talking about is covered by the provisions of SA 299. What is SA? Standard on auditing. So standard on auditing 299 is nothing but on joint audit. All cools? Acha. Now, I already told to you, yeah, we are just writing, just the last thing. I already told to you that the responsibility of joint auditors depends on division of work, correct? However, having said that, there are certain situations where the joint auditors are always jointly responsible. Repeating, however, there are certain situations where the joint auditors are always jointly responsible. How many situations are there? Six such situations are there. When will I tell you? Today? No, next lecture when we meet. But as of now, I'm just telling you why. Because we'll just write the question, but answer, explanation, and writing we will do the next time. But I'm just telling you that although I'm telling you they can be individually responsible, but for certain situations, they are always jointly responsible. All cool? All cool. Come on, let's write. Have you written the question? Let us write the answer. Come on, point number one. Right on, joint audit. Yeah, correct. Hannah. Come on, yeah, Dania. Come on, come on, come on. So, Dania. Advantages. Wait. Advantages copy. Point number 6. And this will be your point number 7. Okay. Advantages you have to write like this only. Huh? One below the other, right? And thereafter write disadvantages. Don't write like this. See, advantages, disadvantages, you don't have to elaborate more than this. This is only what they have given. So ultimately, institute only has given this. I have not done anything. Yeah, so don't try something fancy. No, they can be from the different CA firms. Hello. One joint auditor is from ABC and company. Other joint auditor is from XYZ and company. I'm not telling joint auditors are from the same firm. They can be from different firms. Two firms can come together and they can do joint audit. Two individuals can come together and they can do joint audit. Definitely negotiable. Can be. There's no stopping that. लक्ष्य इतना लिख ले फिर after that I'll show you. They are belonging to different firms. Point 5 is disadvantage is common concern. Common concern means undivided work. That nobody's taking, like vouchers, nobody's doing. Now that is a problem. No? Then to like this, exactly. Then nobody will take up the work, then work will go like that only. Who will check? No, Pooja, wait. Come on, yeah, done, yeah. Advantages, disadvantages, both, yeah. Everybody? Okay. Just write the next question and keep. We are not going to understand it today. We'll understand it the next time when we meet. Then mention the points, situations, or factors where. No, no, Rahul, outsourcing of work is not allowed. 144. Joint auditors. Always jointly and severally responsible. Not this important. Comes in the examination for 5 to 6 months. Simple 6 points of it. Come on, yeah, Dania. Anybody wanted to see that fifth point? Here it is. Bas, that's it then. We'll continue the next time. Go have a breakfast. Enjoy. Cheers.